joining me now to talk more about the report is Joanne, Director of the Survey of Consumers for the University of Michigan. Joanne, thank you so much for joining us from Ann Arbor, Michigan, early this morning. What's your takeaway from this latest report?
While sentiment did increase, it really wasn't by much. So I would say that consumer views of the economy are not much different than they were last month. Consumers have been bracing for impact from the reciprocal tariffs and have been really worried about a worst case scenario in April and May. Now they are feeling like those worst case scenario risks aren't that high anymore, but they're hardly feeling optimistic about the future of the economy. They still see a lot of risks. They're still expecting inflation to return again, but they're kind of holding tight about the eventual impact of tariffs.
Interesting. So what more can you share, Joanne, about the inflation expectations heading forward?
Inflation expectations have declined pretty dramatically over the last couple of months, but they're still pretty high. They're much higher than they were 6 months ago, and also much higher than they were a year ago. And so, although consumers aren't really expecting the really dire, catastrophic impacts that they were expecting in April, they are still expecting inflation to return.
How could this funnel through to the broader economy if consumers are still worried, even though optimism is rising a bit?
If consumers are feeling like there is a slowdown in the economy to come, particularly when it comes not only to inflation but also to their own incomes, they're not likely to have the confidence to continue spending despite kind of dismal views of the economy. So unlike 2 years ago, 3 years ago, when consumer sentiment hit an all-time low and consumers were still willing to spend through it, right now consumers are expecting unemployment to rise, and they're also expecting their income growth to slow down. And so it seems unlikely that consumers will be willing to continue spending at the robust pace that they did the last few years. And that actually could help on the inflation front a little bit.
Yeah. So I'm curious, Joanne, in terms of the expectations here, is it tariffs mostly that are driving sentiment among the consumers that you surveyed?
Consumers are telling us loud and clear that the number one thing on their minds is cost of living and prices and inflation. And the main factor that they see influencing that in the years ahead is tariffs. We had 60% of consumers spontaneously offering unsolicited comments on tariffs. It's pretty rare that we see a majority of consumers agreeing on any one specific factor, but it's been that way for several months now. Consumers across the political spectrum, across demographic groups and income, they broadly agree that they expect tariff policy, whether high tariffs or the volatility of policy, to pass through to consumer prices.
Interesting. So this data and this report certainly has proven to move markets in the past 6 months. I think as traders, Americans adjust, obviously, to a new administration and updates to trade policy, Joanne. I'm just curious in terms of what the expectation is for how this might impact the Fed's decision on interest rates. Does this give you any sort of hard data that could determine what the Fed does next week at its meeting?
What's really interesting is that our data are speaking to both sides of the Fed's dual mandate. The Fed has a mandate to both maximize employment as well as to stabilize prices, stabilize inflation. And so on one hand, we have consumers still expecting inflation to rise in the year ahead, as well as the long run. But at the same time, we're also seeing that consumers expect unemployment to get worse too. So it really tells the Fed that both sides of the dual mandate are things that consumers are thinking about. And on one hand, that might feel like negative news in which that consumers believe both are big problems. But on the other hand, if people start pulling back their spending in order to protect their own finances, that could relieve some pressure on inflation going forward.
And while this data has moved the markets, Joanne, as we discussed earlier, the Fed has called it soft data, not necessarily a hard data point that would cause it to actually change course on its rate policy. Do you agree that it's soft data, or do you think that this could be there is a tangible case to make this hard data?
I would say that most of the data points that policymakers and decision makers are looking at that you might call hard data is backward looking. It comes out with a lag. It reflects what happened in the last few months. With CPI, we're looking at the past year's worth of inflation, whereas the surveys of consumers, we're asking consumers to tell us what is going to happen in the future, what their beliefs are for what will happen in the future. And that's important because consumers aren't necessarily making decisions based on the past. They're making it based on their outlook for the future. So it's really, I think that the different data points that policymakers and business leaders are taking into account, and anyone who's trying to make a good decision is going to look at the whole suite of data, both the backwards looking data as well as the forward looking data.
And in terms of where we go from here, I know you touched on momentum a little bit earlier, Joanne, but any indication as to how we could see this sentiment change over the course of the next 1 to 3 months?
It's going to depend largely on what happens with tariff policy. What's been loud and clear over the course of 2025 is that consumers have been really concerned about inflation. And again, the top factor for them on this is tariffs. We have consumers who are not just worried about the fact that threatened tariffs have been high, but they're also quite concerned about the unpredictability and the instability of trade policy. Consumers are perfectly aware that uncertainty around policy makes it difficult for businesses to plan, and it makes it difficult for consumers to plan as well. So if trade policy stabilizes and we have a good idea of what tariffs are going to look like for the next couple of years, I would expect consumer sentiment to recover. But if the instability, if the uncertainty continues, I would really expect consumers to reserve some judgment, and I think it would prevent them from regaining their confidence fully.
Joanne Shu, Director of the Surveys of Consumers for the University of Michigan, thank you so much for joining us early this morning in Ann Arbor, Michigan.
My pleasure.